Good morning, everybody. Welcome to StockMarketFunding.com. Our new pro trading students are going to learn something, and it's called the SMF Pro Trader Left Elbow Gap Down. And since they've been here, a lot of them in the last month or month and a half, is that you gap down and the buyer got control right on that opening bell. And basically what I want is I want the pro trader to write down 554.28, and I want the pro trader to write down the high of 562.86. That's the range, and it's 1 day after the option's expiration. Basically, what they did was, for the first time in a long time, the way that it would be traded is on this green bar, the SMF Pro Trader bar. You draw a trend line, half of your bar. And as long as you don't close below it, so when you get that uptick, you buy here. And as long, you can have a wick, as long as you don't close below half of that bar, you can let this move run and sell into the top of that strength. And you could see where the sell signal came into play. You could see where the buy signal started right here. And the buy signal was 3, 6, 9, 12, 15, 18 minutes to the peak. And then you could see here that reversal. You could see your percent DS and whatnot crossing over, and you could see where that side of the trend, this is the left side, this is the right, left elbow gap. You buy here, you put the stop market there, and you have to do it quick. And then we let it run, and this is how a left elbow gap down would be traded. And you have to pull that trigger right away with that stop market. And then it took out this support line, which is a resistance line. It broke above it, and it consolidated here. And then we broke up higher, and then we reversed, and now we're going to actually start getting the real ranges in the equities. And that's what a left elbow gap down is. Let's take a look very quickly on Apple, left elbow gap down. There's the close. There's that green bar. You'd buy it, draw a trend line through there, and as long as you can come down and test it, happy your pro trader bar, you can't close below it. And this one here popped the 3-minute buy signal immediately within 3 minutes, 6 minutes, 9 minutes, 12. On the 15-minute MACD bar, you created that 3-minute buy signal. Okay, so this is how these left elbows are traded. And basically, this thing shot off the low of 220, and this is volatility from the bottom to the top, bottom down to the top. It's not like you gapped up, like you've seen what happens with gaps on the open. You gap up, you go bottom down, and then make the move. So basically, it's a bottom up, left elbow gap down purchase, people. And this is how they're traded, and this is how you'll be doing it, because there's going to be a lot of this year. It's not just going to be today. And basically, that left elbow gap down, short sellers that were short started to come out as it moved off the bottom, and that helped get these left elbow gap down moves. Because the shorts, if they stay in it, they're losing money. And they have to buy back. And when they buy back to cover that short, they come up. And basically, these are the ranges so far. And the stock market's been open an hour and 42 minutes. I'm sorry, an hour and 15 minutes. And basically, that's one of the first ones that we've seen. It also was that people that haven't performed in the stock market jumped right in on the opening bell. So you had buyers and short sellers getting squeezed on the open. That's the left elbow gap down.